another podcast with Leon and Brent of Investing Education Academy. Today, we're talking about a topic that you may be aware of, you may not. Apple is about to add another 10 billion to its bottom line without creating any additional products. So, we're going to tell you how during this podcast. Before we do that, I want to take a moment to say, for all of you all who have been sending your well wishes, travel mercies, and all the such for our trip to Morocco. Leon and I recently, I on behalf of IAA went out to Morocco. We're looking at an investment property out there for the Portfolio Panthers, which is a group within the IAA that we actually invest together. It's our highest level membership, and we do international deals. So for everybody who looked at the pictures, made some funny comments, we appreciate it. We laughed, and I felt comforted while traveling, and through all of the adventures.
Boy, did you need it?
Yes, it was a fun trip. So we're meeting with the Panthers this Sunday to talk about that investment deal, in addition to some local property we're going to be purchasing. And we're going to keep you guys engaged. We're going to keep posting, and for the community, we're going to be educating you all on how to buy real estate. Our realtor now has already started recording to put information into the platform, teaching some of our members how to invest in real estate, even if you are not a Portfolio Panther. We're going to be putting these videos out once a month in the platform. And for community members, you will have access to this realtor. So these are all additional things that, like we said, IEA is growing. We're bringing new things to you all. We also have an attorney that we're working with now. So, our attorney will be talking about business structures, how to, if you're an entrepreneur, what you want to do when structuring your company. Some of these things we will be putting into the platform for those who know entrepreneurship, the stock market, cryptocurrency, and real estate are our main pillars for how you can build wealth. There are other ways for anybody who was thinking there are other ways, but those are some of our main pillars that we focus on in IEA. So for this podcast today, want to say, if you have questions about what we're doing, ask us the questions. We're talking about Apple bringing in an additional $10 billion. You all should have questions about that. If you do, please post them. If you have comments that you want to put up, I see Jay Will just said, hope all is well. Panthers, definitely appreciate that when people check in. All is well. We're growing. We just brought on another 3 Portfolio Panthers, so we're up to like 12. So I think we have 3 more slots before we move into the next tier, which means instead of it being 5,000 a year, it's going to be 10,000 a year for everybody who comes in. Anyone who comes in after we hit that 15 mark. So there are only 3 slots left. So thanks for asking, Jay, and we're going to keep growing. Okay. Now, Jay White, I got you. So,
Jay. Okay, what's up, Jay? Yeah.
And so, Jay is one of the original Panthers. So it's growing and learning lessons. And I tell you, Jay gave us a lot of insight onto his expectations of what the Panther group should be and would be. And because of him, we actually changed some of the platform, which is why we introduced real estate for more immediate returns for our investment. So, Jay, understand your input was definitely heard and put into action. So
definitely.
All right, Leon, you can tell everyone why we chose to talk about Apple adding this $10 billion to their bottom line while I do a little bit of housekeeping.
Okay. So they said, the title of this is Apple's adding $10.3 billion to its bottom line without selling one additional item. Now, I mean, think about $10.3 billion in one, well, not in one fell swoop. It's going to happen actually over, let's say, 2 years. But $10.3 billion is as large as some public companies are in their total market cap or even in their revenue. So Apple is adding essentially in some instances a whole nother company or a whole few the market cap of a few other companies. It's adding to its bottom line without selling one product, additional products on top of what it typically sells. And as I was telling Brent before we came on, when I tell y'all how they're doing this, some of y'all may not like this because you all may be involved in how this is all breaking down. And Brent was not happy about this. So the way they're doing it, so okay, take a step back. Some of you may or may not know that Apple, for the past, I think, 5 years, they've actually been designing and implementing their own semiconductor processors or chips in their own phones. They used to rely on Intel mainly for their main chip. They cut Intel out like 5 years ago, right? So that money that they were paying Intel at the time, which was billions of dollars, went straight back into the company to the bottom line, right? So that was on the main processor in the chip. Apple's chip now that they make on their own is called the M2, and that's, like I said, that's been in the iPhone. It's been around for like 3 to 5 years, and they cut Intel out of the picture a couple of years ago. So again, that money they were paying Intel drops to the bottom line. Now, what they're doing now is they're cutting out two very, very large companies out of the Apple ecosystem. First one is Qualcomm. So Qualcomm makes right now Apple buys their wireless modem from Qualcomm. Now check out these numbers. So in 2021, Qualcomm's total company revenue was $33.5 billion in revenue. Of that $33.5 billion of revenue, $6.7 billion came from Apple, which is 20% of Qualcomm's revenue. 20% from one company. Apple is Qualcomm's largest customer. Apple is doing away with them next year. So what does that mean? That means $6.7 billion that they were paying Qualcomm before is now going to drop to Apple's bottom line, right?
And
now,
Leon, real quick, let's for those of you all who don't know the long legacy of romance that we've had with Qualcomm. Qualcomm originally patented the CDMA technology, which was the technology that basically converted a cellular signal into a digital signal, meaning every cell phone, no matter who the carrier was or what you did with it, they had to pretty much pay Qualcomm for that patented technology to basically have one of this little cell phone.
Mhm.
And so no matter who you were, Qualcomm was getting paid. And as these and actually one of Qualcomm's biggest business sectors is patents.
it's patents,
Like
right?
they essentially do research and development, and then patent their findings, not necessarily so they can launch the technology themselves, just so they can sell it to the providers to use it. So that is a big chunk of Qualcomm's business. And for many people who, again, know the history, Leon and I have been investing in Qualcomm since 1997.
Mhm.
So yeah, our rate of return in Qualcomm is probably somewhere over 3,000%. It's something like it's unbelievable. And we did one of our lives, Leon. I don't know if you even remember this. It was from the first time we purchased Qualcomm, how much that money would be worth up until I think it was 2020.
Yeah, I remember we did it. Yeah, it was
And
during
so
COVID.
yeah, we might want to go back and find that. That was a good one.
Right.
But anyway, that just so you all understand the history that we have with Qualcomm, and why Leon's like, some people might not like it. He's specifically talking to me. And I'm okay with that.
and so what Brent said is true. All that's true. Like one of Qualcomm's business revenue generators and businesses is a patent portfolio that they then license out to other companies. Now, the way Apple was able to cut Qualcomm out of this portion of it is because Qualcomm bought Intel's modem business a couple years ago. So it's crazy. They cut Intel out from the main processor business, and then they bought Intel's modem business. And now they have it for themselves. So now by virtue of buying that modem business, now they're cutting out Qualcomm. So this is going to save Apple $6.7 billion per year going forward. So that's going to drop right to Apple's bottom line. And again, that's 20% of Qualcomm's revenue. Apple is Qualcomm's largest customer. So that's the first portion of it. Now, second portion of it is in 2025, they're looking to cut out Broadcom. Broadcom is a massive communications semiconductor provider, manufacturer. They also make like modems, servers. I mean, Broadcom is huge. But what they currently supply Apple are Wi-Fi and Bluetooth chips. And give you the numbers, 2020, Broadcom's revenue was $24 billion in revenue. Of that, $3.6 billion came from Apple because they bought that Wi-Fi chip and the Bluetooth chip, which equates to 15% of Broadcom's revenue. So 2025, when Apple brings this in-house and starts making its own Wi-Fi and Bluetooth chips and systems, that's gonna be $3.6 billion that drops to Apple's bottom line. Remember, above, earlier talked about Qualcomm they're saving $6.7 billion. So in total, over the next 2 years, Apple's going to drop $10.3 billion to its bottom line without selling one additional product. Now, the reason that's great for if you're not an Apple investor, you may want to think about it. If you are, you may want to add to it. I plan to at some point. But think about what it's going to do, right? So this is a way for Apple to effortlessly increase their net profits, right? Because again, that now, of course, all the money that they're going to save is not going to be all of it, right? I'm just kind of giving you a generalization because some of that's going to be spent on other things. But generally, you're looking at $10.3 billion drop to the bottom line, right? Now that's going to help increase Apple's net profits. More importantly, it's going to help increase Apple's EPS, or earnings per share. And that's what investors on Wall Street really look for. So as earnings per share grows, Wall Street comes in and bids up the stock. So this $10.3 billion that they're about to save, the really important portion of it is that it's going to most likely help Apple increase its EPS, which they report every quarter. Which then, as long as that thing is growing, the stock typically grows behind it. So this is a massive move for Apple. And the thing about this is only the beginning. Remember, they cut out Intel like 3 to 5 years ago. They're now cutting out Qualcomm. They're cutting out Broadcom in another year. And then who knows who else they're going to cut out, which again is going to save money, drop it to the bottom line, and help increase EPS and or even R&D. And so just last number is, last year, Apple's total revenues were an astounding $394 billion in revenue last year. Now, this 10.3 that they're going to essentially save by cutting out these two companies equates to about 2.5% of Apple's revenue. Again, with doing nothing but just cutting out two vendors that they're going to save 10.3 billion or add essentially 2.5% to their bottom line, which is going to increase EPS, earnings per share, and should increase net profit. So this is think about it. Apple sells the iPhone, right? That's their main product. I think like over 50% of their revenue comes from the iPhone. But they're also a chip maker. They're now a modem maker. They're now a Bluetooth chip maker. Like Apple it's crazy to me.
Also, don't forget, Apple wants to come out with the car.
Yeah, the car is exposing the world. We've been hearing about this. Oh, then the big talk last year was that they're going to be coming out with virtual reality headset, VR headset. Yeah. So I mean, the fact that Apple can make all these things in house, save the money, and have that money just drop to the bottom line and or increase EPS, earnings per share, I mean, it's amazing. I mean, companies would love to be able to add $10.3 billion to the bottom line, but most companies don't have the personnel or the money to be able to either buy buy out these companies' divisions or create these things in house. So I mean, Apple's just a beast. So yeah, we just want to bring this to your attention that they're adding this much money to their bottom line by selling not one additional product.
Okay, so the question came in: do we think that Apple will reach back and test the lows of the 130s per share? How do you think they'll get? So as it relates to Apple, will they hit the 130s? I would say yes. Right now in this market, we're still in an election year, going into an election year. The market is going to see instability inside of that. But you think about the news. When the news like this comes out, it's not as if it all of a sudden just skyrockets the stock. You still have to figure, what does this mean for staff? Like, are they going to have to staff up? And all these questions, what I'm about to go through is business overhead expense. What will happen with staff? Are they going to lose staff, which increases the bottom line again? Or are they going to have to increase staff to meet manufacturing needs? Technology. What technology are they bringing in-house in order to meet the development needs of all these chips and these new markets? As they increase their serviceable markets, they're going to have internal expenses that go up. So by no means do I think that the information that we're presenting today means Apple goes on a tear over the next year and they never come down. There's going to be, I believe, Leon, if you feel something different, I believe there will be pullback in the area. I think you'll see Apple in the 130 range at some point before it, takes its next run. But the question is, if Apple right now is at 145 per share, and we're talking about will it get to the 130 range, that's $15 per share. Is it worth waiting if your long-term horizon is over 5 years? And if so, how many shares are we really buying? If you're buying hundreds of thousands of shares, then it matters, right? Because you're moving a needle. You're talking about serious money. But the average investor is probably going to buy at $140 some a share that maybe will put $5,000 towards it. maybe. And so in that case, you have to think about your time horizon. Does it make sense for the average investor? And Jay, I know you asked this question. You're not an average investor. You actually watch the market, and you have the ability to probably have your finger on the pulse more than most. The average investor, we never suggest timing the market. And when you start timing the market, Leon says this all the time, time in the market will beat it. So for the average person, you're thinking, you know what, that sounds good. I'm going to add to my position, or I'm going to put a couple hundred or a couple thousand into Apple. You still want to make sure you have a balanced asset allocation. So all of a sudden, getting this news doesn't mean you become overly weighted in the tech sector, meaning the majority, because of this information, you go out and move half your money into Apple. We're not saying that. And Jay, I know you didn't ask this part, so I'm just saying this for the other people who might be listening, who are either new investors or novice as it relates to the stock market. Don't get excited off of news, even if it's coming from Leon and I. We are presenting this so you all know what's going on in the market, because honestly, most people don't even know what's going on in the market. They just invested at some point in time and forgot about it. We do these lives so you all can make informed decisions. Look at your portfolio, see if Apple makes sense. If you already have Apple, you normally I'm different than Leon. Leon, I think, doesn't move past about 6% in any one position in his portfolio. For me, depending on the portfolio, I'm not really going more than in any one stock. Normally, there's an outlier, but normally I don't go beyond about 15%. You got to see what's comfortable for you. So I think Apple's a good buy. I do think it will hit the 130s at some point, because there are going to be pullbacks in the market. Is it worth the wait? That depends on who you are.
Yeah. So So Jay, so Apple is only about 11% off the 130 low, right? So it's not like it's far from the low. Buying, I mean, again, this is not financial advice. I'm not saying buy or sell. But for me, I wouldn't necessarily wait to say, okay, what I would do is I would do maybe like half a position, right? So I would say, okay, we never know what the market's going to do. We'll hit 130. We have no idea if it's going to hit 130. But I wouldn't necessarily want to miss the run. Let's say Apple went on a tear, or let's say it dropped. We don't know. What I would do is I'd say, okay, let me put half a position on. So instead of doing my typical, it's 7%, I may do 3.5% and wait. If it drops, maybe I'll add more. If it rises, maybe I add a little. It all depends on what you want to do. But right now, it's so close to this recent low. I don't think waiting is necessary. I mean, again, it's all individual choice. But it's not like it's up at 160, right? Then I'd be like, okay, wait for a pullback. We're only 10% off the recent low. To me, buying here, it's to me wouldn't be a big deal. But does it get there? We have no idea. But I will say, Apple, like all stock, is going to move with the general market. So, go back to the good old, we've been talking about for almost 2 years, the good old Fed, and we have possibly 3 more rate hikes coming. And the data has been incredibly strong for the economy, which is upsetting the Fed, which means it's going to keep going. So I'm expecting a pullback in the market, because from January through like yesterday, the market shot up. Tech stocks were up almost 20% this year. The general market at its high was up about 8% in 2 months, right? Those are yearly gains that happened in 2 months. So there's definitely a pullback coming. So, you could wait, but again, just answer your question, Jay, no idea if it's going to hit 130. But for me, I would have no problem buying here, because it's so close to that low anyway. I don't feel like I'd be missing a lot if it dropped a little more from here.
So Jay said, I do admit I get a rush when things are on sale.
You sound like you're addicted like us.
Yeah. You know what? And this is a great time, Jay, and anybody who's listening who understands the market or understands how to place a trade, you can put in a limit order or a tracking order. Tracking orders are relatively new to the marketplace, meaning that you can put a track on a stock at a dollar price versus a percentage move. So you can actually put a track on Apple at 135 and then just wait for it to trigger if it does. And this is one of those things where, you can put it on and say, if you create a strategy, we're not telling anybody to do this. We're just saying this is available. You put a track order on, or if you don't know how to do it, you can call your brokerage house. This is why we always suggest that the brokerage house that you use has a 1-800 number. So call the 1-800 number. Put a track on Apple at 135, a buy track, and so that it's going to track the stock until it hits 135, and it'll automatically purchase it. You can put it on for a certain amount of time, 3 months or 6 months, and that way you can say, you know what, I'm gonna give myself 6 months, and if it hits that, cool, I bought it. But you do run the risk that it's going to run. So if you want, you can also put a track on for a buy at, let's say 150. So if it starts to run, it triggers at 150. The only thing is remember this, you do not want to leave both of those on,
right?
Because if all of a sudden there's a day where there's just a Tesla type volatility, if you are no Tesla, there's volatility in Tesla that's unreal. You have a day where maybe it goes to 150, you buy it, then it swings back to 135 and it triggers another buy. You hopefully have enough money to cover those.
Right.
So, and this also goes back to why we say it's not always advantageous to try to really play with the market, because you can tempt fate to a point where you're purchasing things that you don't want to at prices you didn't anticipate. However, you asked the question. That is the strategy that answers your question. Do with it what you will.
Do with it what you will.
Yes, what Leon said. So I mean, we definitely love questions, and we want more people to ask us questions during these. Jay, thank you for asking, and we hope that the answers we gave made sense more than anything else. And watch out for gurus that just tell you what they said is the absolute truth, and they say go do it today, because that's not accurate. Everybody's different. Definitely. All right. So with that being said, Leon, you got anything before we head out?
Yeah, one last thing. I just want to kind of put perspective around how big this $10.3 billion is, right? That they're doing nothing, essentially nothing for. Roku, the company Roku, we all know Roku, the streaming company. Roku is worth, the company's market cap is worth $9 billion. The whole company, right? So Apple's basically adding the value of a Roku to its bottom line by essentially doing nothing, by cutting out vendors. That money's going to stay in house. That can, like I said, it can increase EPS, earnings per share, can increase net profits. All
dividends.
Dividends.
Apple is a dividend company.
Yep, dividend pays. It's a small dividend right now, but something like this could have it actually increase that dividend, maybe, possibly. So I'm just saying that, give a perspective. Roku is essentially the size that Apple will be adding to its bottom line by selling not one extra product over the next 2 years at $10.3 billion. Roku right now is worth about $9 billion as a company. Incredible.
All right. So everybody, you heard it here. You may have heard it here first. I don't know. But we are heading out at this point. Jay, thank you for the questions. And, next we'll be back in 2 weeks. If you all have questions, this is a great set your clocks. We're well into 2023. We're still in the first quarter. There's a lot of year ahead of us, and we're going to be talking about a lot of different stocks. We are growing. Real estate is now one of the things we're pursuing pretty actively. But we're also looking at investing in not only the private equity deals, but some of the smaller companies and people who have these local startups. So if you are a local startup out there and you wanted to pitch to us, we have a group called Portfolio Panthers, and we're looking to start putting money into the local entrepreneur economy. So if you want to pitch, go to IEA. You can go to Portfolio Panthers, IEAPortfolioPanthers.com, and click the button that says submit a pitch. And you can do it virtually, or you can submit an application to pitch to us in person. With that being said, we're growing, things are changing, and we are super excited going into this new year. Leon, we owe them 2 stock picks, which we'll be putting into the platform. So if you want to know what our stock picks are, come over to www.ieanow.com. If you're running on a treadmill listening to us right now, make a little message in your phone to check with IEA. Go to IEAmembers.com to log into the platform so you can actually see our stock picks. Everybody, as always, thank you for listening and supporting.